Hey guys, Boris Haas from BK Forex. Welcome to our Forex Daily Technicals for 11:01:13. As always, trading foreign exchange or margin carries a high level of risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin and to seek advice from an independent financial advisor if you have any doubts. Well, big day for the dollar against the euro. The euro just collapsed to 16-month decline here, or the largest decline in 16 months. Broke, of course, 37 handle, 36s, and kind of finding our way sputtering around right in front of the 35.50s. So 35 is definitely a very, very choppy little chunky area of support. It was resistance over here, it became support kind of over here. So I doubt it's going to just slice right through it. But the kind of vicious movement that we had in the euro definitely suggests that there's probably more to the downside here before we kind of exhaust ourselves. But I do think we're coming to an exhaustion point at 3,500, at least for the intermediate term. The correction in the euro definitely was foretold by a lot of the technicals, because we saw the stall over here for 3 days before we finally started to correct to the downside. And of course, yesterday's FOMC was just the perfect trigger for liquidation. So euro still under a lot of liquidation, still under a lot of pressure. There may be some counter trend rally here, but now 36.50 becomes resistance at this point, and pretty stiff one at that. And 35 becomes support. That's pretty much where the levels lie down in the euro as it stands. Aussie had an interesting day as well. The thing about Aussie is that it was a pretty ugly flame out at the 95. We probed to the upside and then actually ended up on the lows of the day. And generally, when you have that kind of formation, it really foreshadows further downside action. So there's quite a lot of this 94.50, obviously very, very strong support level, but break of that really opens up the full test of the 94 support level, which is really where you have a lot of the true support lying down here. And that would be, of course, a perfect unwind of this leg over here. The much deeper support is 93. So if we get a serious liquidation, the end point, at least for the near term, probably going to be likely around the 93 area. But the fact that Aussie kind of flipped itself around to the downside so much is quite ugly. The one thing that will be very positive is if we do actually reverse this flow and end above 95.25 and on the highs tomorrow, that would be a really, really bullish note to the end of the week, and could create basically the foundation for a run back up to 97. So it could play both ways, but for now, path leaves resistances to the downside. Yen correcting a little bit today, had a tight inside day, but I do think there's a little bit of cause for worry for the bulls in the sense that we couldn't hold 98.50s. We couldn't really sustain a lot of momentum from yesterday. Now, we've had a big rally off the 97s, but still, the fact that it's kind of stalling ahead of this 98.50, this 98.50.99, clearly seems to be a big overhead. And it may need to consolidate a little bit more. May even have to come back below 98s to see if you can find support here to reload and try to make another run towards the 99s. If it turns back down severely, though, if it comes back to 97.50 and breaks that, that would be a lower high, create a much more negative construct, and puts us right back into the chop zone. And one of the more interesting things, if you look at the yen, is look at the volatility constriction. Big volatility, smaller volatility, smaller volatility, smaller volatility, perhaps even smallest volatility. It's just really an incredible compression of volatility over the last 6 months or so. Cable protecting the 160 level very, very well. But again, here cable is just sort of a critical crux. This 160 goes, it really opens up the run towards the 159. 59 is much deeper support here, and it's unlikely that gets broken unless you just have a complete liquidation cable here. But the fact that we're kind of holding just right above the 160 suggests maybe we could be in the process of making a higher low and reloading ourselves back up for a run towards the 62 resistance level. So we have to see how that trades out tomorrow. For now, though, cable is relatively neutral to mildly positive given its price action as it stands at this moment. And what else do you want to look at? Coming back to the Kiwi. Kiwi to me is interesting because it's got this incredibly wild volatility range here as between 83 and 82. It sort of touches the top, touches the bottom, ends up in the middle, perfect equilibrium. But either way, whichever way we break this range, I think could signal to us a possibility of the relatively deep directional move. So if we break the 82s, it looks like we could be going all the way down to 80s. If we take out the 83s, maybe able to rally back up, certainly towards the 84s in Kiwi. So that's an interesting construct to keep an eye on for the rest of the day. Wishing you guys the best of luck and the best of trading. Boris Schlossberg for BK, over and out.